Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. A short while ago, President Trump unveiled a litany of new tariffs. He said the U.S. will impose a 100% tariff on any branded or patented pharmaceutical product unless a company is building their pharmaceutical manufacturing plant in America. Trump also announced a 50% tariff on kitchen cabinets, 30% levies on upholstered furniture, and 25% tariffs on heavy trucks. Incidentally, these new tariffs will take effect October 1st. Separately, the president formalized an agreement for a group of American investors to take control of TikTok's U.S. operations. The president said the deal would protect the data of U.S. users and that Oracle will secure the algorithm on the American version of this platform. Vice President J.D. Vance played a critical role in crafting this deal.
The company will be valued around $14 billion. We actually think this is a good deal for investors, but ultimately the investors are going to make the determination about what they want to invest in and what they think is a proper value.
That is Vice President J.D. Vance. In a moment or two, we'll get some perspective on this deal from the Asia Pacific. But we begin here in the States, where markets had to recalibrate the outlook for Fed rate cuts today after a strong reading on U.S. economic activity. We had the S&P 500 down for a third straight session, the longest slide in a month. For a look at market action now, I'm joined by Brian Krawez. He is president, also the chair of the investment committee at Scharf Investments. Brian is on the line from Los Gatos, California. Brian, thank you so much for making time to chat with me. You want to weigh in on this TikTok deal? You and I were talking offline a moment ago about you being invested in Oracle. What does this mean for Oracle?
Yeah, I mean, thanks for having me. I always enjoy being on the show. It's good news for Oracle. I mean, that's extra business for them. And the TikTok price seems actually pretty attractive when you consider, how big of a social media platform it is. So overall, it should be a good deal for Oracle shareholders and hopefully a good deal for the American public if we can, ensure that Americans' data is not somehow transferred over to China. So overall, should be a decent deal for investors and hopefully for the country.
The tech story has been a big part of the market's performance this year, last as well, I guess. Artificial intelligence has been one of the predominant themes. We were down today for a third straight session, and there is a lot of concern about lofty valuations, no matter how you slice it. How are you feeling about the AI trade, perhaps tech more broadly?
We're a little cautious. It's an interesting market. I've been managing money a long time, and I'm starting to get a little bit of shades of 99. You've got OpenAI with something like $1 trillion in commitments to do data centers. They've raised about $63 billion, and I think last check they have something like $13 billion in revenue. So you're talking about, a massive investment for what is still a relatively small revenue base, and so you're starting to see deals where NVIDIA, invests in OpenAI, and then OpenAI buys NVIDIA chips. It's a little bit of shades of the financing back when, Cisco, Nortel, and Lucent were doing the same kind of thing. I'm not saying it's exactly the same level of bubble, because, clearly NVIDIA has, a much better profitability than some of the internet firms back then, but you're starting to get a little bit of shades of it, and it is a little bit concerning.
I'm wondering whether you were surprised at all. I want to change gears here and talk a little bit about the macro. Surprised by this very strong reading that we had on second quarter GDP, the final revision with a growth rate of 3.8%. That seems stunning when we've talked about weakness in the labor market and expectations that the Fed is going to lean in here and be a little more accommodative. That was called into question today. How do you feel about that?
It's definitely a conundrum. I mean, you've seen a 3.8% GDP revision, as you just mentioned, up from 3.2. So, 3.8 is a pretty good, you called it stunning. I mean, it's definitely very good, healthy growth. On top of that, you've had some other data where, continuing claims wasn't as bad as expected. So you've had a little bit of different crosswinds, and you haven't seen the inflation really starting to pick up yet from tariffs. But we think that's probably coming. And then the other thing I'd say about the strong GDP read is a big help to GDP is all of this investment that's happening. And a lot of it's related to AI, as we just talked about. So there's been massive commitments in AI. And so there's a lot of investment that goes into the GDP equation. And that's definitely playing a part. The other thing is there's just general optimism around some of the changes that President Trump has done. And so you're getting even investment in just general manufacturing. You've gotten just sort of the hammer coming down where they're saying you need to build more in America. So you're seeing a lot of GDP being very much helped by investment. The question is that investment going to be worth it? Is it going to be malinvestment? Are we going to build tons of data centers and not really have revenue from that? That's the open question. And some of the other reads is that parts of the GDP are actually not as strong. And so it's a little bit too early to tell. But certainly it's an odd environment for people to be calling for the Fed to make massive rate cuts at the same time you're having GDP revised up.
So you made the point about the possibility that tariffs will be inflationary. Maybe that is down the road a bit. Do we need to talk about the potential inflationary impact of energy as these AI data centers begin to demand a lot more in the way of electricity, and providers, utilities or private companies just race to be able to produce the amount of electricity that's required? Is there the risk here that prices begin to creep up and that begins to spill over into inflation in a way that becomes damaging?
Yeah, no, that's an astute observation. I mean, you've probably seen the charts. Energy prices are zooming higher at a rate we haven't seen in decades, and that definitely is going to transfer through in terms of inflation. Although energy as a percentage of GDP is a relatively small component now. I mean, it's not like in the 70s, and so it's probably less of an impact than what it had in the past. I'll also point out that healthcare, we don't know what's going to happen with the ACA tax credit. And you've got wrangling in Congress and in Washington about a potential work stoppage. But one of the issues that I think isn't getting talked about enough is ACA Marketplace, which is sort of Obamacare health insurance. You're talking about 20% type premium increases in a lot of those markets. And overall healthcare inflation should be a lot higher than people are talking about, even in the private sector. So that'll definitely transfer through the economy, as healthcare is, a pretty big component of people's expenditures.
So we're approaching the end of both the month and the quarter. For the month, I think so far the S&P is still up around 1.9%. And for the quarter so far, I think the S&P is up around 6%. I'm curious about the extent to which you're rebalancing right now as we close out the quarter, and any pivot that you're making. What does that look like right now? So we talked a little bit about being worried about AI, and also I would say the valuations are very, very high right now. But what's interesting, and this was sort of similar to, back 25 years ago, when you had an opportunity to buy sort of value names at just historically low valuations, and yet the overall market was extremely high. If you bought those low valuation stocks, you actually did very well over the next decade. Similarly, right now, there's some very high quality companies that are trading at valuations you've never seen before. I mean, just to throw out a couple of them, Zoetis is a company that's really big in animal health. It's trading at a valuation relative to the S&P it's never seen before, and actually a fairly reasonable valuation for a company that's as high quality and dominant in its market space, and probably will benefit from AI because ultimately they come up with drugs for animals, and AI will undoubtedly make it easier and cheaper to come up with new drugs. And because they are dominant in their sector, they'll probably be able to hold on to some of the pricing. So it'll be good for people's pets, and it'll be good for the company. Another one would be a name like UNP, which is potentially going to do a merger. Rails have dominant market space. It's only around 18 times, in a market that's 22 times. And yet, if they're able to pull off that deal, they'll be one of only a few companies that can compete. And they also similarly can benefit from AI as they can reduce labor. So there's a lot of these companies out there that will probably benefit from AI, be able to get their margins up, potentially enhance revenue. The market is sort of ignoring them for the most part.
as people are piling into names that are really AI beneficiaries or directly involved in the AI ecosystem, such as NVIDIA, and all the semis and names like that.
I'm curious as to whether or not you're looking for opportunities in certain areas of technology offshore, whether in Asia or perhaps Europe. Is that something that you're leaning into a little bit at the moment?
Yeah, we own Samsung, which is a name that I think has that we could do a whole segment just on Samsung, and they're missing. They actually created HBM, which is the memory that's very important in AI, and then they didn't know what to do with it, so they got passed up by SK Hynix. But they are one of the world's largest tech companies by revenue, very important to the ecosystem, and have had some missteps, but recently. We're approved for HBM3 for NVIDIA, and there's talk of them being approved for HBM4, and that could be a very big help to their revenues. And ultimately, they're trading something like 25% over book value, and a kind of teens multiple. So you've got if they were a U.S. company, they'd probably have a much higher valuation, but because they trade in Korea, they're somewhat forgotten.
Brian, we'll leave it there. Thank you so very much. Brian Krawez is president. He's also the chair of the investment committee at Scharf Investments, joining us on the line from Los Gatos, California, here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. President Trump formalized an agreement today for a group of American investors to take control of the U.S. operations of TikTok. The president said the deal will protect the data of U.S. users, and Oracle will secure the algorithm on the American version of this platform. Vice President J.D. Vance played a central role in crafting this deal, and today he said the new company will be valued at around $14 billion. Here is Bloomberg's Annabelle Drewlers.
In the executive order, it essentially acknowledged or stated that there is a plan in place that meets the conditions for TikTok to continue operating in the U.S. So it says that there's a framework agreement in place where the app is going to be essentially operated in a joint venture structure that will be majority owned and controlled by Americans. So you can see here President Trump signing that executive order just earlier today. ByteDance, as well, it's contained in the order. It says it's going to take less than a 20% stake, and also that there's going to be a new board of directors that will be established to run TikTok's U.S. operations. Just who the eventual buyers are, that part is still not exactly clear. But what we've heard from sources is that Oracle and Silver Lake, they continue to be the names that are coming up. MGX is actually another one that's come up. This one's new, but it's an interesting one because it's an Abu Dhabi-based sovereign or state-owned investment firm, rather, that does have a big focus on AI and advanced technologies. The framework of the deal does seem to at least meet what would have been one of the key conditions for China, which is that the technology, the actual algorithm, will stay in Chinese hands. Just a copy of it is going to be licensed to the operations in the US. But China, as you said, it's yet to say publicly whether it's actually granted approval for this, even though you heard from President Trump there saying that the President Xi had given the go-ahead when they spoke last week. The Chinese embassy as well didn't respond to our request for comment. But we are coming up against another deadline for this one, so the deal does need to close within 120 days. That takes us until the end of January. We've already seen a number of deadlines for this, or deadlines being extended, in fact, 5 extensions. But it is something that will have to get past China. It's also something that's going to have to get past U.S. lawmakers, who are still promising to very closely scrutinize the contents of that deal as well.
That is Bloomberg's Annabelle Drewlers. At the same time today, President Trump announced a 100% tariff on any branded or patented pharmaceutical product unless a company is building their pharmaceutical manufacturing plant in the United States. Trump also announced a 50% tariff on kitchen cabinets, 30% levies on upholstered furniture, and 25% tariffs on heavy trucks. These new tariffs, by the way, will take effect October 1st. For some insight, we spoke with Deborah Elms of the Heinrich Foundation. She is head of policy there, and she spoke with Bloomberg TV host Sherry and Avril Hong on the Asia trade.
Well, first, Trump is never going to be done with tariffs. So anyone who thinks that this is the end, or at any point that would be the end of his tariff game, is delusional. The man loves tariffs. He'll continue to use them. So that's the first point. The second is that these negotiations have been largely about what were called the reciprocal tariffs. That is, those tariffs imposed under emergency powers, originally on April 2nd, have been revised since then. That's where the focus has been. And what the Trump administration has been doing is moving more and more tariff coverage to these sector-specific tariffs on increasingly now everything, as you can see, including now the kitchen cabinet and the couch in the living room. I mean, this is an incredible, breathtaking expansion of tariff coverage that will affect everyone, including those countries that thought that they had a deal in place under those reciprocal tariffs that are not covered by these sector-specific new applications.
Picking and choosing which sectors the president protects among the American industries. How big of a problem is this when you have different levies contending with different ones, steel and aluminum in place, and now trying to perhaps help those car makers that are dealing with higher prices when it comes to metals?
Yeah, the complexity is honestly driving companies, supply chain managers, customs brokers right on off the edge, because every day is a new set of tariffs. We've had 28 revisions to U.S. tariff codes since the beginning of this year, 28 separate revisions, plus all of these sector-specific tariffs and the order and the stacking of tariffs. One sometimes stacks, sometimes doesn't. This product might, that product might not. I mean, it is mind-bogglingly complicated to trade with the United States now.
That is a good number to keep in mind, the number of revisions that have already been pushed through from the U.S. President, Deborah. But when it comes to perhaps how this is being received by the base, how much cognizance is there between the rhetoric and the tariff policy, that actual impact on these industries that Trump is saying he's supporting?
I think that's unclear right now. I suspect you're going to get a lot of very disgruntled Americans, regardless of their political base, when they try to go replace a worn-out kitchen cabinet, when they try to replace a sofa that's sagging, when they go out and they look for purchases, especially of their pharmaceutical products. 100% tariff on imported products for pharma is going to hit an awful lot of people, literally, in their bodies. So I think there will be deep unhappiness by consumers, in particular in the United States, whether or not they work for these particular companies. So we'll have to see how this plays out. Clearly, he thinks it's an important way to drive manufacturing back to the United States. I think consumers who are sometimes in manufacturing, but most Americans are not in manufacturing. So most consumers who are not in manufacturing will say, why am I having to pay this enormous price for a few jobs for somebody else?
The countries that we are watching in terms of how their industries might be particularly affected include India because of its pharmaceutical trade with the US, and then the auto industry in Japan and South Korea. All this happening as these trade negotiations are still ongoing. What is the best course of action for them at this stage?
Well, the counterparties are in real trouble here because, on the one hand, their instinct, I'm sure, is to just say, forget it. Just like, we're done. You let us know what the number is and we'll deal with it then. But obviously that has incredible complications for their domestic economy. So they're going to have a negotiation with the United States. But the complexity is bewildering. The changes are complicated. A lot of those reciprocal tariff deals, again, are based on this IEEPA statute, which is going to be reviewed by the Supreme Court starting November 5th. That might change altogether. So again, for governments, they have to engage, they have to negotiate, but it's unclear for them, what are we negotiating over? And if I get a fantastic deal on autos in this case, and then heavy trucks come into effect, does that cover heavy trucks as well for me? Probably not. But does that mean that I need to make a new negotiation to deal with heavy trucks? I think this is completely uncertain. And you can imagine that trade partners are waking up every morning, very nervously reaching for their phone to see what is the new information that has come in overnight from the United States.
What about domestic businesses? Are we going to see more legal challenges against President Trump's new tariffs?
I think it's possible. I think the real challenge, though, for these newest tariffs, these sector-specific Section 232 tariffs, is that they're officially done for national security purposes. So now how exactly your sofa in your living room is a national security threat is unclear, but nonetheless, that's the justification. That is very hard to overturn because the court gives very wide leeway for national security. Congress, which has done nothing anyways, is going to say that's not our prerogative. That is the president's prerogative. So I think these national security tariffs will be very hard to argue about.
Deborah, talk to us about how there has been already that bypassing of trade, right? Given how economies such as China, potentially, they are seeing that they can't export to the U.S. anymore. We talk about the China shock 2.0, 3.0. There are dual risks at play here, including for Southeast Asian economies. What have you been seeing in the realignment in the past couple of months?
On the corporate level, it's starting to accelerate. So companies at the beginning of a lot of this sort of froze in place and said, well, let me just see how this evolves. We'll push as much inventory into the U.S. as we can, and then we'll wait and see. At this point, it seems quite clear to companies that you're going to be dealing with a high tariff environment and an uncertain environment for a very long time. So firms are increasingly looking to pivot. Now, that doesn't mean that they're pivoting overnight. Some are. Many of them don't have that option, but they're certainly exploring whatever possibilities they have. Now, we will see, and we are seeing in the supply chain space, increasing rerouting of trade. And that will, I think, continue and it will accelerate. On the government level, it has been more challenging than perhaps people would anticipate to create coalitions to deal with trade in other venues. In other words, how can we create new trade opportunities for our businesses outside the United States? But I think that is also accelerating. I mean, this is the week in which ASEAN's having its economic ministers meeting, and there was a lot of discussion in ASEAN about how do we beef up our internal ASEAN trade? How do we do so with our partners in Asia, who are all part of the Regional Comprehensive Economic Partnership? How do we accelerate progress on this 4-year-old agreement? That, I think, is going to continue as well.
And this could also figure into the conversations that are coming up at the APEC event next month and the ASEAN Summit as well. Deborah, great to get your insights. Thank you so much for coming on our show on what I'm sure is a very busy morning for you. Heinrich Foundation Head of Trade Policy, Deborah Elms.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.